If you're a real estate agent earning $200,000 a year and you want to grow your passive income, this show is for you. Learn secrets other agents use and hear from experts in our field who will guide you on your journey to investing in assets like apartment communities so you can take your commissions and turn them into cash flow. Here's your host, Randal. Let's dive in.
All right, guys, welcome back. Today is an interview that I did with the Best Ever podcast group of podcasts. They have the Best Ever Advice, Best Ever Real Estate Investing Advice. They're a huge podcast, and I was honored to be invited to go onto their show and talk about my story and what I've been doing and what I'm working on currently. So hope you enjoy this episode. It is, again, as I go on these other podcasts and I talk about some of the stuff that I'm working on more so than interviewing other people, I want to be able to put it on our channel here so that you guys can get me on the other side of the microphone as well, and kind of see what it is that I'm working on. So I hope you enjoy the show. If you would, go on, rate and review, helps us a ton. Always with all the guests that I'm trying to bring onto the show to provide value for you and your real estate journey. So here we go. Let's jump into the conversation with the Best Ever CRE podcast.
Best Ever listeners, welcome to the Best Ever CRE podcast. I'm your host, Joe Cornwell, and today I'm joined by Randal McLeaird. Randal's the owner of Ridgeline Investment Group. He also is the host of the Agents Building Cash Flow podcast. He's done single-family flips, owner finance deals, syndications, multifamily, and more. Right now, his portfolio is 250 units and single-family notes. He's also done over 100 flips. First time on the show. Randal, welcome. How are you today?
I'm doing great. Excited to be here. You guys have such an awesome show. It's an honor to be on.
Well, we appreciate your time and you joining us today. So since it's your first time on the show, let's jump into your background. Where are you from? And then how did you initially get into real estate?
Sounds good. I am from San Antonio and been buying and flipping here and doing my investing here predominantly. I got into real estate. I mean, the short version is, got out of college, went and worked for a buddy of mine who didn't go to college. Same birthday as me, same everything. Guy already had a mortgage company. He had houses. He had assets. He had toys. He had all kinds of stuff. I was like, okay, what the hell was I doing the last 4 years? So anyway, that got me into real estate. He gave me, Rich Dad Poor Dad, read that, and then started looking at buying some things. Didn't actually buy anything until 2009. I went traveling. I was overseas. Came back in 2008. Great time to want to get into real estate in the United States, right?
Yeah.
But anyway, yeah, that's when I got back into the States. I went and worked for an attorney because I thought I was going to go back to law school, kill some time, wait for the market to change, learn, do all those things. And so I worked for a fee attorney doing the title side of the business and learned and saw a lot of real estate investor transactions that were happening. Ended up buying a deal that one of the investors walked away from, and that was my first deal. That was in 2009, give or take. And then from there, just kind of ramped up and started buying and flipping and progressed from there. So.
What was the first deal?
First deal, 258 Bundy, San Antonio, Texas. It was on the east side of San Antonio, and again, the investor walked at closing. I was doing the paperwork, I was closing, and the seller was there sitting in front of me, nice lady. She was like, the guy just walked away. He had it under contract for $15,000, and I had like $12,000 to my name, so I offered her 10, and she took it.
Wow. At the closing table.
At the closing, yeah. I mean, we had clear title, we had everything ready. It was all ready to go. Just had
talk
to
talk about motivation in the moment.
Yeah, exactly. And the attorney just changed the docs, did everything. Boom, boom, boom. We were done. Anyway, found out there was a massive hole in the roof. There were a lot of burned down houses in the neighborhood. So when I drove up, I thought it was just going to be a foundation that I bought. But got to it, and first deal. Just sight unseen, bought it, and ended up flipping it for $15,000. So like made $5,000 on my $10,000 investment. So worked out well. And then from there, just started buying. I bought a bunch of houses that year and owner finance, and we're buying houses for $20,000.
Yeah.
And so I still have some of those notes today.
Okay, so were you from San Antonio, or had you?
Yeah.
Okay, so you knew that market, you were comfortable with it. Obviously, it sounds like you were taking some pretty large leaps of faith here, buying stuff sight unseen for your first deal. So, I guess what went into the mindset of having the confidence to do those deals with obviously limited background?
So that's a great question. To preface all of that, when I when I went to work for my buddy when I got out of college, he was a loan officer. So I got out, went straight into the mortgage side of the business, and I was a loan officer. So I knew that side of the business, and I'd been in real estate, been looking and researching and doing a lot of digging, right? Went to Australia, lived there for 3 years, and wanted to do like lease options because I couldn't invest over there, didn't have a lot of money, so I was trying to do sandwich lease options. And then when I came back, I was working for that attorney, and the attorney gave me the advice. He said, look, you need to go and just get the reps. Look at a bunch of houses. Here's my fob. I'm a real estate broker. I can, get you into houses. So he gave me his fob, and I just went every day. I was looking at houses.
Okay.
So I'd seen a lot. And plus, I was from the city, but I'd never been down this street. I'd never been to that side of town. So what gave me the confidence was the fact that the other investor had it under contract, and I knew him. I'd closed a bunch of deals for him, and it wasn't a property. Excuse me. It wasn't a property issue. It was a fund issue. Like, he didn't have the money. It just closed on something else, and he was trying to get rid of this other deal. So anyway, I knew him, and I talked to him about it, and so that also gave me the confidence. So it was just, I had a lot of reps. I had seen a lot of properties, but I just hadn't found a deal yet. And so this one just kind of fell in my lap. Literally fell in my lap. I was sitting there, and it came to me. So
what's interesting to me, and I obviously have talked to hundreds of investors who were investing at that time. That was a little before my time, and I wasn't able to take advantage of kind of the lows of the Great Recession. But what always, I guess when I try to put myself in investor shoes at that time and look in hindsight, it seems to me the feeling would have been, if I buy this property for $10,000, there's very few ways I could get hurt. Was that the belief at the time, or did you have fear that you were making mistakes in buying these cheap properties?
I was so ignorant to the downside. Honestly,
okay. You weren't even thinking about what could go wrong. It was just
I mean, in a sense, yes. But again, I talked to somebody about this yesterday. If I had to sell that house for $5,000, okay, great. I went through a transaction. I figured it out. The house was actually there. It wasn't just a foundation. Even if it was just a foundation, it was the lot that I bought. Probably could have sold that lot for something and made some money, and I would have learned, hey, don't just buy sight unseen. Go, So at the time, I remember the next two deals that I did. I bought them both from the same broker. They were both REO properties. They were both $18,000 or $20,000, closed on the same day, and they were in the same area, right? And so it was just again, $20,000 for a house. Had I known more at the time, I would have bought everything I possibly could have, right? So there was some, I guess, fear of loss at the same time, but they were just very inexpensive houses, and I was new and I was green, and I just wanted to get in there, get my hands dirty and buy something, right?
Yeah. No, I think that's a lot of great points. Looking at, especially for new investors, when they look at it through this lens, it's like, okay, what is my upside? What is my potential downside? Can I live with the potential downside? And even if worst case scenario, as you said, you had an optimistic viewpoint of like, okay, this is just the cost of tuition. I'm paying for this education if a deal goes bad. And obviously at that time, like you said, your exposure was $5 or $10,000, pretty minimal when you look at today's dollars and how expensive deals are today on average, and how much more exposure there is today versus the pit of the recession. I think, and the reoccurring theme at almost every investor I talked to at the time is, I wish I'd have bought more.
Oh yeah.
I've probably heard that, 100 times, if not more.
Yeah.
I think that's a lot of good things for newer investors to take into mindset going forward.
I try to figure out now, like, what that looks like now. And again, what is that $20,000 house now? Because is it $100,000? Is it, what are we going to look like in the next 10 years? And same on the multifamily front. We were just talking a second ago about these small multis, and I just had one under contract, 23-unit deal, and it was a fully vacant property, and we had to go in and do all kinds of work to it. And I like that asset class or that size unit, because again, I'm not pulling in other investor funds when we're talking about risking capital. Like doing these larger deals, sometimes you're risking other investors' money. But if it's like my money and I'm going in doing this deal, then I've de-risked it, and I'm okay taking that educational loss if I were to lose money. But anyway, that 23-unit deal is like ended up having to walk away just because the due diligence and the repairs just got out of hand. But that's kind of what I'm looking for now. I'm like, what is that price point? If I bought that 23 unit and then over the next 10 years, what is that thing going to look like? Even if it cost me an extra $100,000 on the repairs, which is kind of what it got to, would I have won? Yeah. I don't know. It's so I don't know. All right, like, is that how you're looking at things now? And I
mean, that's an interesting kind of way to frame it, because if I had to extrapolate values out, right? Let's say for 10 years, if I had to make a prediction model for 10 years out, it's hard to imagine that we would have the same percentage of growth we've had the last 10 years or 15 years. Yeah. But if you would have asked somebody 10 or 15 years ago if they thought values would be today what they are, I guarantee you nobody would have been that bullish on real estate.
Correct.
So while I think it's less likely that we're going to have the same percentages of an increase in value proportionally, I also am confident, at least in the areas I'm investing in, that the long-term value of those neighborhoods is going to continue to grow. Yeah. And that's what I invest for. I look, my philosophy is, can this cash flow in a stressed model, worst case scenario type of model, what are the things that I have risk exposure to? And even under those exposures, can I still cash flow this property and survive through some volatility if it happens?
Yeah.
And that's kind of fundamental question one. And then fundamental question two is, okay, is this going to be worth more in 10 years than it is today? And how confident am I in that growth of the rents in the market? My overall fear, I guess, for any significant long-term real estate value growth is, especially when we're talking about multifamily, is the the constraints on income growth, right?
Yeah.
Because the only way we're going to have a big run like we did the last 15 years is if we continue to have really high inflation. So that's a bad thing for everybody. It's a good thing for people holding assets, but there's obviously a cap, right? A ceiling there. And I don't know what that cap is. Like, what can tenants and obviously this is a local thing you have to look at, but it's like, what can tenants really sustain, especially when you look at some of these really high price markets, the coast, New York, Southeast, like the areas that have had these massive run-ups in rents. Can they really sustain, 5, 10, 15% year-over-year growth for a long period? It's hard to imagine that being possible.
Yeah, I agree. I saw a newsletter came out today, and it was the rent growth. It hasn't gone negative. It just went from 14%. This is single family, but it went from 14% growth year over year to 2%. And so it's declined in the sense that year over year, but the rents themselves haven't dropped. And so, I agree. It's like, I don't know when we're going to see that again, or how we're going to see that, unless you are in a coastal area and it dropped significantly.
Yeah. Yeah. Well, and that, and me personally, I invest in the Midwest, and the reason why I believe in the Midwest, over the next 10, 20 years is because we didn't have those massive run-ups. Now, we've had large rent increases, in the last 15 years, but it wasn't, 300%. Yeah. If you averaged out our last 15 years, it's probably somewhere between, 4 to 5% year over year.
Yeah.
And I think that's more sustainable growth long term. And it allows affordability for those middle income, type of tenants. So, I'm more bullish on the Midwest than I would be in some of the other more volatile markets.
Yeah, that's how I feel about San Antonio. Similar, a lot of Texas and surrounding areas, secondaries, tertiaries, that sort of thing. That's where we're looking for those.
So, okay, all right. So you did a few smaller deals. How did you get into flipping? I mean, you said you flipped over 100 houses. That's obviously a lot. Like, what did that business look like?
So I was always of the mindset, seeing all these transactions on the, the escrow side, the fee attorney side, and in talking to wholesalers, going to meetups and all of that, I always wanted to just control the asset. It's so hard to find a deal. This is my mentality. It's so hard to find a deal. I want to maximize the profit potential of that deal. Especially if I'm going to direct to seller and having those conversations with them. So that's how it started, and it really started at a meetup. This guy shows up, and he's got a little pamphlet and I think some VHS tapes, and it was literally him walking properties on the VHS step, talking about, this is what I look at. This is the crack in the wall. Okay, this tells me, and him walking property. And once I saw that, I was like, oh, okay. fantastic. I know what to look for when I'm walking a property, and I mean that's something that anyone who wants to get into flipping can go talk to a contractor or a rehabber and walk properties with them and see that happen and see what they're looking at, and so once I had that, then I started buying. I mean, those first 2 houses that I bought that for $20,000, those were light rehab. I went in as little as I could spend on them, and then I owner financed them. But then the actual full retail flips, when those started cranking over, it was after I saw this pamphlet and talked to some other guys, had a better contractor base to work with, and then we started going after some of those deals, And I think one of the first big retail flips that I did, it was with my brother, and I was like, look, it de-risked it for one, gave me the confidence, right, to go after like a higher price point and take on that risk. And I was like, if we make $500, like this is it. I'm full time, quitting my job, doing everything. Like I'm just going into this and doing it. And then we obviously made more than $500, but that's what kicked it off and really got me going.
What year was that?
2010, probably.
Okay, and then you went full time in real estate after that.
Yeah.
Okay.
Yeah.
Gotcha. So you started flipping around that 2010 time. How was this like 10 a year? Like what was your kind of runway on flipping? Or are you still doing them?
It was give or take 10 to 20 a year, I would say, but we sprinkled in some wholesale deals in there, things that I wouldn't take on. A lot of them were owner finance deals, carry paper. We did some sub-2 wraps. We did all kinds of different strategies, right, throughout that period. And then I'd say 2018, 19, 2017, I started ramping things up, had a private lender who was like gung-ho, hey, go buy as much as you can, do things that you can. And so it made the friction of getting into deals non-existent. It was just a matter of driving to pick up a check and taking it there, Yeah. And so, we ramped it up, and we were doing 50 transactions a year. How many flips? I don't know, 25 a year, something like that.
Gotcha.
And just cranking out some business from 15 to 2020 really is when we were really heavy into it.
Okay, and it's so obviously to do that kind of deal flow, it sounds like you had a really big marketing machine going. Was this, off market, direct mail? What was your strategy on
the main
lead source?
strategy that worked for us over and over, just consistent, tried and true, was mailers. We would do postcards. Okay. Yeah, it's simple, just to get the phone to ring, and then we had lead intakes. We had the whole business model was lead manager. And then once they got it locked up, we'd have acquisitions rep go out, actually tour the house, get it under contract, and then it'd come in. We'd have transaction coordinator, then it goes to dispo. So dispo was either me buying it or we'd sell it wholesale to somebody else.
Got it. Interesting, yeah.
But it was
it's crazy to me how much that business has changed. Like I look back at when I was first learning about real estate. Probably about the same time, maybe 2015, 2016, trying to get into investing, find my first deal. But like the people I knew who were successfully like marketing, off market, direct to seller, all those types of deals, wholesaling, the amount of competition they faced then versus, maybe not so much today, but like a couple years ago at the peak of the market. Yeah. It was insane how much growth that marketing side had seen and competition.
Yeah, I agree. We were 40 to 50 a month in postcards.
Yeah.
$40,000, $50,000 a month just in spend. And then I talk to guys now, a buddy of mine who actually worked for me for a while. It's like, I do PPC nationwide. I spend $5,000 a month, and I close $100,000 in profit. I'm like, all right, good for you. It's a much different model. It's just a larger net that you're casting, and your cost per lead is so much lower, and close rate is a little bit higher when you get somebody on the hook and that sort of thing. So that's different.
Well, and it's tough because it's like I can speak from experience. I've done intermittently, direct marketing. I go to just kind of buy a couple deals for myself, and then I kind of turn it on. I'm not like a consistent year-round marketer with a team for that, but I'll do it sporadically when I'm in like kind of acquisition mode. But for me personally, I probably get, at the peak, I was probably getting 20, 30 postcards a month for various properties. Yeah. And then, now it's definitely fallen off a lot. I might get a couple a month now, but you can tell as the market slowed and transactions slowed, the people spending money on marketing. The wholesalers and other people have really ramped down their businesses as well.
Yeah. I mean, when COVID hit, we had, I think, 3 months, no phone calls, or 3 months with, like, it just died. It was literally, and I was like, all right, that's it. I'm not dropping another, excuse me. Sorry, man. I'm not dropping another month worth of marketing on this. It's just not going to happen. So
yeah. The world kind of shut down, and then I think it, at least in my market, kind of peaked in like 22, obviously before rates started climbing, and then just now, I think right now the market's starting to slowly pick back up, but I mean, transactions fell off a cliff here.
I mean, I've seen, so it's funny talking to wholesalers and talking to guys. So my business shifted. I'd go all wholesalers now. If I'm going to buy something, it's either on market or it's a wholesaler or a friend is selling something, and it's a deal that I can pick up. But the shift is still, selling things that are overinflated ARVs with, no repairs needed. Buy this thing. It's like, guys, come on.
Yeah.
So if that's dialed in, and I have a few, like a handful of wholesalers who are like, hey, these are real numbers, it's just buy them quickly type deal.
Yeah.
But it saves a lot of time and brain damage on my side of talking to all the sellers and going to all the appointments and doing all that stuff. So
yeah, it's tough. It's tough to do that as like a small scale business. You really, if you either have to kind of be all in or all out to be successful in the marketing side of it. And that's why like you said, the good wholesalers that are legit and actually have, real numbers, they're the ones that are going to be successful long term and make money and are worth spending your time to get to know.
Yeah.
So, okay, you switched into multifamily, it sounds like. So what was your kind of transition into your first larger multifamily deal?
So again, that came around COVID. We'd been doing really well, and I turned 40 at the same time. I mean, this could get into a philosophical conversation as well. Had my son. I think my daughter was just born, and this is 2020, 2021 time frame. Turning 40, all the things are happening. Midlife crisis, whatever. I was like, how do I really want my life to look over the next 10 years? My son's 13. I'm going to be 50, and I don't want to be running around, transactional Randal. It's just, there's a lot of moving parts. There's a lot of stuff going on. And if you can scale that business and systematize the business, fantastic. But there's still people involved, and there's still, I need more commission. I need more this, whatever it is. So I kind of paused, and I went and took some courses and learned a lot about syndications and setting up funds and setting up, crowd funds and all of these different things. Because I wanted to just go and have a pool of capital that I could deploy and put into either multifamily or single family or whatever it was, right? That's kind of the holy grail. If you're flipping properties or you're doing something, you just want that capital able to be deployed quickly. So anyway, I spent some time on that, and I had always considered getting into multifamily. Arguably, it was a very challenging time to start looking at multifamily because, and luckily, I didn't buy anything in the very tail end of the 23, I guess, or in 2022, whatever it was, and overpay for something. But that's really what got me into it. And then I started going to meetups, joined some masterminds and that sort of thing, and ended up partnering on a 75 unit deal just outside of Dallas, and then another deal outside of Atlanta. And just, one was the one in Atlanta is more of a, I'm on the GP team, and I'm put some risk capital into the deal. And so I get to see the whole thing and what that looks like. The other one is more partnership, ownership type deal. And both are just learning experiences, getting into them, seeing what it looks like. And I've been looking personally, like I want to buy something locally and just be the lead and own the thing outright myself. And that's so. I've had a number of deals either under contract or in the offer stage, but that's what I'm working on currently. It's finding something like that and buying it and operating it locally.
Okay, got it. But so you're still, sounds like multifamily is what you're most interested in continuing.
Yeah. Again, right. So right now we've got a crowd fund where we're raising capital to buy single family and owner finance them, right? So that is just bread and butter. That's kind of going, and that thing is up and running. the multifamily, again, it's finding those assets like the one I just mentioned, that 23 unit deal that is a heavy value add that I can get in, rehab, either sell or refinance. That was the other challenge with that one. We would have had more money on the table, and we can talk about this if you want to, but so, like bridge lenders being okay lending you more money than you really should be borrowing, and then not being able to refinance on the back end. But anyway, yes, to answer your question, yeah, that's what I'm working on right now is multifamily, and we've got some other deals that we would look at that are kind of like this structure that we're in right now. It's a warehouse with industrial office type of deal.
Okay. Flex space.
Yeah. Just because it's I like this asset class. And there are some guys in San Antonio doing it that I'd either invest with or I would partner with to maybe do some of these.
Yeah, no, it's the flex warehouse space is taking off in my market as well. It's you're seeing them pop up, developments all over. I know a couple guys developing those as well. Yeah.
So, but yeah, that's all. The long-term goal is owning apartments and having a system that we are managing these 40 to 50 to 150 unit complexes. But again, my offers have been lower than what sellers want to take. So until that changes or until the deals start to make sense to me, then I'm not going to go in to buy something. That doesn't really make sense. But again, I have this conversation just like I was asking you a second ago. I could easily argue with myself and say I could buy it today, and if I put the right kind of debt on it and low leverage, then in 5 years, if rates drop or if this happens, whatever, it's going to be more valuable no matter what. So I may as well just go buy one, right? That's kind of the argument that I have with myself.
Yeah, it's tough. You kind of alluded to this, but it's like the older that we get as investors, your priorities change, and what matters in a deal changes as well. And this is kind of common sense, but it's like when I was a brand new investor and I was still working my W-2 job, I didn't have money. I didn't really have much time either, but I didn't have money, so it was like I had to find deals that were small enough for me to self-manage, turn them around, and have a huge equity gain that I could, and I was kind of doing the Burr model, before that was really the Burr model. But it was like that was the only way for me to grow my capital because, I had to find ways to do that, and I wasn't going to be able to do it just by saving money. And so all of my time, effort, and capital went into this, the first few years. But it's like, as you mentioned, then I started having kids. I now have 3 kids, and it's like, your priorities change. What's important to you changes. And now one of the biggest metrics I look at on a deal is how much of a pain in the butt is this going to be?
For sure.
And that's a vague term, but it means, okay, how much time, how much stress, how many sleepless nights, how many times am I going to have to problem solve really difficult, complex problems on these heavy value add deals that we do? And that's certainly something I look at. And it's like, okay, well, if I know going in this is going to be a nightmare deal, and I've had a lot of those, is that upside equity or cash flow or whatever it is, the kind of best use of the deal, is that going to be worth all the blood, sweat, tears, time, headaches? And I've learned that there are deals that, even though they were great deals and I made a ton of money and a ton of cash flow, weren't worth it. Like in hindsight, I would not do them again. For sure. I think that's kind of the wisdom that comes with experience, hopefully.
It's very funny because I have this mantra where it's just because you can doesn't mean you should. And I was literally given a house. I was given a house. I was trying to think about this the other day, and I don't know why I took this house, and it had to be because I had a vacant lot just north of the city, and I was like, okay, cool, we can move this house. It's small enough. I had the house mover who I wanted to move it, go look at it. He was like, nah, boom, okay, $20,000 to move this house. Okay, great. Turned into the biggest nightmare. I had a house mover steal the house, drive it to South Texas. I had to follow him. I'm not even kidding.
That's a first, yeah.
Man, it was. I'm driving down the street, just videotaping, and they were booking it out of the city to try to get away. They had a police escort, like all this stuff. So wild, no permits, nothing, and somehow they moved this house. Stole the house. I ended up having to pay double to move it from where they were to where my lot was just to get it back. I had to sue them, and I lost $5,000, $10,000, $15,000 on that deal just to get a free house. And I was like, no, just because you can doesn't mean you should. And, it's more complicated than you think it is. Real estate, you got to be patient. And yeah, I don't know, man.
Yeah, no, that's a great point. So I'm a broker here in Ohio, and I work with a lot of out of state buyers who want to invest in Ohio, and I have to explain this to them. A difficult conversation, and it's hard for people to wrap their head around. But it's like there are neighborhoods, there are properties that if they gave me it for free, I would not take it.
That's
and
right.
To your point, to your story, because sometimes a free house is going to cost you $20,000, $30,000, $40,000 loss when you're all said and done.
Yeah, not to mention all the time. That's
Yes,
just monetary.
exactly.
And that deal, the stress of that deal was ridiculous. My wife, we laugh about it now because it's such a silly story.
Well, hey, you were the first. You might be the first guest ever on Best Ever CRE, whatever. We're at almost 4,000 episodes or whatever it is, that have ever had a house stolen from them. You might have the first award for that.
Not just
actually physically stole your house. So we'll have to mark this in the history books.
Nice. Yeah. Got the pictures, man, the photos, and the brain damage to go with that too. So
that's great.
Fun.
It's a great story. All right. So aside from the deal you just mentioned, do you have another deal in mind that went negatively? Maybe you lost money. Specifically, maybe you have a commercial deal that didn't go to plan, or one that comes to mind that didn't go well.
Yeah, I mean that deal in Atlanta, it's not going to plan right now, and the guys, it's a well-known group that owns it, and that.
So this is when you invested into.
Yeah, I put risk capital into it, so I earned GP share on the deal.
But you're not actively operating it. Okay,
correct.
Okay.
And in it, so they bought it. Rates increased. It's on a bridge loan. The business plan was to repair a down building. Right, an entire building was down because it was a 175 unit deal. Building was down because it got burned, right? And so immediate value add right there. You get those units back online, increase the NOI. You've got a more valuable asset. That never ever happened, And then when COVID hit, I think the challenge of evictions in that market, for whatever reason, the courts were not processing evictions, and it never really resolved itself until they got an attorney who figured it out, and now they're able to actually get evictions the way you typically would in a time frame. In the interim, just trying to get the asset to perform, they brought on, or they allowed more Section 8. That translated into another building burning down.
Wow.
Translated into a murder on property, and so all these things just happen, and so. We still own it, and we're working hopefully with the bank to get it back online. But once you have that issue with the compression of your rental income, it's gone, right? You can't get it back until you actually rebuild units, get the insurance to rebuild that one that burned down, and then our CapEx was being used to pay down. So anyway, that's been a very challenging deal. That has been a very challenging deal, and so I'm grateful that I did not raise capital or bring other investors into that deal. Again, it's me being able to risk my own capital to learn something and see how other people operate deals. But it certainly has not gone.
What did you guys buy it for?
I want to say $19 million.
$19 million. Okay. Yeah. What do you think it's worth today?
Oh, as is. If it were to sell, probably 17.
Okay.
Possibly. Yeah, the NOI is down. I mean, it's down. It's not. Yeah, it's not.
And what do you think it's worth stabilized if you were able to get everything, if you were able to from here to implement a plan?
Yeah, 22.
Okay.
Yeah.
Got
I mean, but you have two down buildings plus a high vacancy rate that,
sure.
It's just.
And what would the capital outlay be just to get it stabilized?
The last conversation I was in on, I think we still needed like $1 million or something just to buy a new rate cap or to refinance or to bring new equity in and get everything fixed the way and have a buffer so that this doesn't happen again.
Yeah.
But it's not necessarily that we need that much money. It is CapEx dollars are locked up until we have the building repaired, right? So can't get the building repaired because we have other issues that came up that the money's been spent on.
Yeah. So in hindsight, what are your kind of like top 3 lessons you've taken from that deal so far?
For if you're looking to be an LP, vet the sponsors, right? And I vetted the sponsors. I don't think it's any issue on that front. They have a lot of assets. They own a lot of deals, and this one just happens to be challenged because of the type of debt they put on it and the issues at the property. Another lesson, not on the LP side, would be in my mind, in my world. If I have an issue with evictions or I have an issue with occupancy, I'm on site. Like, I'm getting to the bottom of it. I'm going to figure out, I don't care if I have third-party management or not. Like, I want to understand, and I will be there, and I will be figuring out what is going on at the property. And I don't feel like that really happened. I think there were too many different assets that this one didn't get the proper again, like, hey, we finally found an attorney who is going to fix this problem. Okay, that should have happened within a week, not, like, all hands on deck, go figure that part out. And so just things like that.
So just lack of oversight and attention on this particular deal. Potentially,
yes. Again, I'm a small guy in the pool, listening in on what's happening with that deal.
Sure.
And so that's just my outside looking in. It just took a really long time for them to figure out the process of getting the evictions through. And then again, lo and behold, somebody's figured it out. It just took us 6 months to figure it out instead of finding that person as quickly as possible.
Right.
And the other lesson is, if you're going to invest in a deal, you might lose your investment, and understand that going into it. Real estate has risk, just like everything else.
Sure.
But at the same time, the bank has been very gracious in their timing and letting the management team try to figure out a way to get this asset back online so that it's performing, so that it's not a total loss to all the equity that's in the deal.
Yeah, no, that makes sense. Well, we appreciate you sharing that. Obviously, it's a lot easier to talk about the deals that go right than the deals that go wrong. So, yeah, we appreciate those insights and lessons you took from it.
I love talking about bad deals. It happens to everybody. If somebody tells you it's not, they have never had a bad deal, then I'd, be curious how many deals they've done or what they've looked at and what they've been involved in.
Just a matter of time, that's for sure.
Yeah. But it's also, that's how you learn. This is what I tell my kids all the time. It's great having kids because I get to teach myself lessons by trying to teach them lessons. I'm like, oh yeah, you gotta learn from your mistakes there. And you learn more from a mistake or from a failure than you do from just winning all the time. So
absolutely. Yeah. I mean, we've talked about it a lot on this podcast, but it's like when we had a 10, 15 year bull run in the market and values are going up and rents are going up and it was hard to make a bad deal. Everybody felt like a genius. Everybody felt like they couldn't do any wrong. And obviously the last couple of years we found out that markets factors change quickly and a lot of people did get exposed to those risks that had not previously happened in the last 10, 15 years. So, I think that gives people a lot more perspective on both the upsides and downsides to real estate.
Yeah, and it can be great. Yeah, I mean, there's lessons on both sides, but if you got into it in 2018 and everything was roses, I mean, you could have been slapped in the face with real estate slows down. Oh, what?
Yeah,
it's like one of those. So, luckily I bought. My first deals were right in a very depressed market, and so I've seen that side of it, and I saw a lot of investors who I'd worked with from the title company, from the attorney's office who I was doing all those deals. Literally one of the guys that ended up coming and working for or partnering with the attorney to buy self-storage back then had just gotten laid off from a large financial institution right after the great financial crash, right? And so hearing his stories and hearing, his whole process and going through that kind of clued me into, it can go down, be conservative and know your numbers. And if it is going down, don't pay 80% ARV of a deal, right? It's just, you can't. So.
Those are great lessons. All right. My second to last question for you today is, we're nearing the end of 2024. What are your focuses for the end of the year?
So I'm still in the acquisition mode of a small multi, right? That is a big focus. So it's really having ththose conversations with brokers and calling some sellers directly and talking to them, and just hunting for those deals, and growing the single family owner finance business to where you've deployed $5 million to buy those properties. So those are the two main focuses that I have right now.
Got it. Sounds like a plan. So, all right, my last question for you, Randal, is where can our best ever listeners connect with you and find out more about your business?
Easiest way is at ridgelineig.com. And we've got, the single family offering up there. We've got, a little chat button at the bottom. If they chat on there, it'll reach out to us, and we'll be happy to chat with anybody that reaches out.
Very good. We'll be sure to link to that in the show notes. And once again, we really appreciate your time and sharing your wins and losses with us here on the Best Ever podcast.
Joe, awesome. Thanks for having me. It's been a blast.
Best Ever listeners, thank you so much for tuning in. If you enjoyed today's episode, be sure to leave us a 5-star review and share this with someone else who could value from it. Make sure you're following and subscribe to the podcast so you don't miss any. Thanks for listening. Have a best ever day.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.